Good, welcome. Thank you for coming tonight. My name's Hannah. I'm here with HomesFund. I drove in from Durango this morning, and I've been talking to people all day about how amazing HomesFund is and all of our great programs. So my plan for this evening is I'm just going to go through, can you hear me okay? Okay. I'm going to talk about our different mortgage assistance programs, and then I'm hoping to just open up the floor so you guys can ask me any questions you might have. And yeah. So a little bit about HomesFund. This is our mission statement up here. We've been around since 2008. We're a 501c3 nonprofit, and our mission is to build diverse and resilient communities by supporting the development of affordable housing programs and equipping residents with the financial resources and educational tools to achieve homeownership in Southwest Colorado. So basically what all that means is we recognize that within this region, housing is a really tough part about living here. It's very expensive, it's very competitive. We also recognize that incomes are here and the cost of housing is up here, and so HomesFund is trying to bridge that gap. How we do that is through offering really large down payment assistance loans, and also offering the knowledge and one-on-one financial counseling through our educational programs to help people feel more empowered to enter into the housing market here. So this is a little flow chart. Hi, welcome. Come in. On how things work at HomesFund. So we provide homebuyer education classes. They're normally twice a month, and these are an amazing resource. They're free classes, and they are all day. They go from 8:30 to 4:30 in the afternoon, and we talk in full detail about the whole home buying process. So we go over how to budget, how do you improve your credit. We talk about the real estate process. We talk about the mortgage lending process. We talk about inspections and what you can do with the results of your inspection. And we talk about home energy efficiency, maintenance. So it's a really deep dive into what you need to know to really go out there and start shopping for a home. So after you take homebuyer education, we love it when people come into our office for the free one-on-one financial counseling. And this is where we talk all about you and your particular situation. We look at your finances, we talk about your goals, we look at your budget, and we come up with a loan scenario so you know what a potential housing payment could look like with how you currently manage your finances. So it's really, really helpful. They normally are about an hour to 2 hours, and our housing counselors are amazing, and they really help you and hold your hand through this process. So those two educational pieces get you all prepared to go to a first mortgage lender. So HomesFund, our down payment assistance, that's not a first mortgage, that's a second mortgage. Your first mortgage that you're going to go and talk to a lender or talk to a bank or a credit union about, that is what's going to cover that big chunk. So that big mortgage to cover the whole price of the house, most of the financing, and then HomesFund comes in with the down payment assistance to help get rid of that mortgage insurance and keep your monthly payment nice and low. So once you get approved by a first mortgage lender, then HomesFund will come in and provide the down payment assistance. Does anyone have any questions on that so far?
Homebuyer education, you said this is a whole day. What are those classes?
Where are the homebuyer education classes? So we have two coming up in Cortez. One is April 25th. That's at the Cortez Chamber of Commerce. And then one on May 30th, and that's also at the Cortez Chamber of Commerce. Those are both Saturday classes. Yeah. Yeah, and so there are sheets on the table over there with a QR code, but you can also go to our website and there is a tab on our website that says attend a class, and that's how you get signed up for those. So that's, a great next step from here if you're wanting to learn more. So this is a very busy slide. I have printed out and given to you, most of you, the Montezuma County income limits. So all of our mortgage programs have income limits. And I'm going to tell you all how to read this chart. There you go. And if you can share with them. So as you can see, all of our loan programs have income limits. These are income limits that are set by HUD every year. And you'll see it says the word AMI on your chart there. That means area median income. So we base how much down payment assistance you're eligible for based on what your household makes. So what percentage of the area median income your household makes. So how you read this chart on your printout there, you look for your household size and you determine how much you make as a household. And so let's say I am a household of 2 in Montezuma County and I make $65,000 a year. And I'm a first-time home buyer. So I'm looking at this amount that says FTHB, because I'm a first-time home buyer. I then go across here, underneath Montezuma County. It will tell you how much down payment assistance you could be eligible for. So in this circumstance, if I was a household of 2 in this county, and I made less than $65,000 a year, I would be eligible for 30% of the purchase price in down payment assistance, up to $105,000. So these are large down payment amounts. Yeah?
If you're not a first-time home buyer, you're not eligible at all?
No, we still have money for non-first-time home buyers. So on this chart that's printed out, you would just be looking at the category that doesn't say FTHB on it. So instead of being eligible for 30% of the purchase price, you would be eligible for $47,800 in this circumstance. So we have a little boost for first-time home buyers, but we still have money for non-first-time home buyers. That being said, the definition for a first-time home buyer is really pretty generous, I think. It's if you haven't owned a home in the past 3 years, you would still be considered a first-time home buyer. If you've only owned a home with an ex-spouse, you would still be considered a first-time home buyer. Or if you've only owned a mobile home in a park, you would still be considered a first-time home buyer and eligible for that extra down payment amount.
So you said 3 years is eligible?
Yes, after 3 years, if you haven't owned a home in the past 3 years, you would be considered a first-time home buyer. So if you owned a home 4 years ago, you're a first-time home buyer again. So I look at this chart probably 30 times a day to determine how much down payment assistance our clients qualify for. So when you come in for counseling or you apply for a down payment assistance loan with HomesFund, the first thing we do is calculate your household income. And then we see where you fall on this chart and how much down payment assistance you'd be eligible for. Any more questions on this slide? This is a great reason to come in for counseling because we'll calculate your income and tell you exactly how much down payment assistance you would qualify for. Okay, this is another very busy chart. They get less busy from here. This is just to show you that, because we're a nonprofit, we got to get scrappy with things. So we pull a lot of different funds from a lot of different programs. So these are our loan programs by source. So when you get a loan with HomesFund, you might actually, you might be eligible for $60,700 in down payment assistance. That might be 4 loans stacked together to give you the maximum amount. So you might have 4 loans with HomesFund to get you the biggest down payment amount that you can have. So we offer our loans in two different ways. The first way and the most popular way is through a shared appreciation mortgage. So this is a silent mortgage requiring no monthly payments. HomesFund is a co-investor in the property. So what this means, I find it's just easier to explain with numbers. Let's say you find a home for $450,000 and you come to HomesFund for your down payment assistance loan, and you're eligible for $60,700 in down payment assistance. That is 13.5% of the purchase price that HomesFund is assisting you with. 8 years later, the house sells for $500,000, resulting in $50,000 in appreciation, which is a gain in value. The home is now worth $50,000 more than what you bought it for. So you're looking at a $50,000 appreciation times a 13.5% share, because that's the original percentage that we assisted you with in the down payment up front. So your appreciation share is $6,745. So your final payoff for this loan would be the principal loan amount, $60,700, plus that share in appreciation, $6,745, resulting in a final payoff amount of $67,445. So these loans, like I said, you don't have to make a monthly payment and there's no interest rate. HomesFund is like a co-investor in your property. When do you have to pay off a shared appreciation loan? After 30 years, because these are 30-year notes. If you sell the home, if you do a cash-out refinance, which is different than a rate and term refinance. So a rate and term refinance, you wouldn't have to pay HomesFund off, and that's when you are going to your lender and you're refinancing into a lower interest rate. A cash-out refinance is when you're going and you're getting a new mortgage for a higher amount and you're able to actually use some of the difference. You would have to pay HomesFund off in that circumstance. Or if you're no longer occupying this home as your primary residence, that's the other time you would have to pay us off. So we're trying to avoid investor situations. We want people to be, who are using our money to stay in the community, to live in the community, not to use our down payment assistance and move to Tahiti and rent their house out for twice as much as their mortgage is, right? You're welcome to have roommates, but you can't leave and no longer occupy the property as your primary residence and have people rent it. Any questions? This is not for an Airbnb. This is for the opposite of an Airbnb. So the other model you can take a HomesFund loan out is an amortizing mortgage. So this is the more traditional method. You will probably see this with your first mortgage lender. This is when you are making monthly payments on this loan that is reducing the principal loan amount. So it's a fixed rate, 30-year amortizing loan. Each payment is reducing that principal loan amount. So same situation, you find a home for $450,000. HomesFund is going to assist you with the $60,700 down payment assistance loan. And the interest rate that we use is 2.5% below whatever your first lender is using. So in this example, the interest rate is 3.5%. So that means the principal and interest payments for this HomesFund's down payment assistance loan is $273 a month. So just so I'm clear, you're paying your first mortgage lender's loan, that first mortgage, that monthly payment, you're paying that, and then this down payment assistance loan also has a payment. So you would be making payments on 2 loans every month. This payment has to fit into your debt to income ratio. Has anyone heard of a debt to income ratio yet? So debt to income ratio is something that your lender and HomesFund is going to look at, and it's telling us how affordable your housing payment is. So your debt to income ratio is telling us that your monthly debt obligations plus your housing payment has to be below a certain percentage of what you make every month. Normally, that debt to income ratio has to stay below 43 or 45%. So your housing payment plus any monthly debts that you have to pay, so credit cards, auto loans, student loans, they have to be less than 43% of what you make as a household every month. So this option, this extra payment still has to fit within that ratio. It can't make that ratio go above the 45%.
So for somebody who wants to purchase a house for $450,000,
Mm-hmm.
so their income has to be like $100,000 a year?
So the question was how much the household's income would have to be to qualify for a $450,000 purchase price.
You have to pay your mortgage, has no money to pay your mortgage, pay your student loans,
Yeah.
credit cards.
Yes, so I mean, it just depends on how much debt you have and how much money you have saved, right? So if you're able to put a lot of money down, you don't necessarily need to have that high of a yearly income. So it depends on your personal situation. If you have no debt and a bunch of savings, you might not need to make that much every year to qualify.
And also, can you put, like, for example, more than 20%, 30, 40%, so that way your loan is less?
Yes.
So whatever money you make, let's, for instance, you use your savings for a down payment, so that way your mortgage is less. So you can evaluate that too?
Yes, yeah, we encourage that. So the more money you put down,
Yes.
the lower your monthly payment will be, which is why HomesFund's down payment assistance, plus if you have personal savings, is a really amazing situation because you'll be putting lots of money down up front, so your monthly affordability will be a lot better.
Yeah, because maybe my income is not going to represent $100,000 or $50,000.
Right,
It can be less than that.
right. Yeah, so that's why, one of the big reasons why HomesFund is doing this is because we want to help people, afford and be able to qualify for a higher purchase price than what they might have been able to without HomesFund's down payment assistance. Because we're helping you put more money down, maybe more than 20%, 30% sometimes.
The chances for a $450,000 home to increase value would be better. You would try to invest in something that costs less money that you have to repair and all that stuff, or the saving was there.
Mm-hmm.
Okay.
Yeah. And HomesFund's loans have closing costs just like your first lenders will. So that's a great reason why to come in for counseling again, because we're gonna help you budget and save for all of these fees and other costs that come with buying a home besides your monthly payment, those upfront costs. Any questions on this? Okay, so it's completely up to you which model you take your down payment assistance loan out as. There's pros and cons to both. So some pros to the shared appreciation loan: there's no monthly payments, right? So you have a much more affordable monthly housing expense. And you're able to reach a higher purchase price because we don't have to fit an additional payment into those debt to income ratios. The cons are you're uncertain of the amount of the final payoff, right? We don't have a crystal ball. We don't know how much your home is going to appreciate by. It's a percentage of an unknown number. And there's a possible additional cost of an appraisal at payoff. So if you are paying HomesFund off and not selling the home, we still need to determine what the value of the home is, and that comes from an appraisal. And you, as the borrower, will be responsible for paying for that appraisal, so we can determine how much the home actually appreciated by, so we know how much our share was. I always like to mention that this share in appreciation, this is why our loan programs have been so successful, because that is what is getting cycled into the next family's loan. So when you pay your share of appreciation to HomesFund, we just cycle it right back into the next person's down payment assistance loan. It's kind of this cool closed loop system. And then the amortizing loan, when you're making those regular monthly payments, the pros are all market appreciation belongs to the borrower. The balance owed is always known or available. You can just call up our office and we'll tell you exactly how much is left and how many more payments you have. And then the cons are obviously you have a higher monthly housing expense, and this monthly payment has to fit in with your qualifying ratios, which can sometimes be tricky, especially if someone has 3 credit cards, student loans, an auto loan. It can be tricky to fit another debt in. I like to say too, if it's your dream to buy a house and put $100,000 in of, remodeling, and it's really going to make the value of the home go up, you might not want to take it out as a shared appreciation, because HomesFund is going to share in all of that added value that you put in. You might be someone that looks at an amortizing loan. But if you're someone that's goal is to keep your monthly payment as affordable as possible, you want to look at the shared appreciation. It's up to you. And your housing counselor and HomesFund can help you determine which method would be the best for you in your situation. Any questions on this slide? So our programs have guidelines. In order to use HomesFund's programs, you cannot own any other residential real estate in La Plata County, Montezuma County, Archuleta County, Dolores County, or San Juan County, Colorado. So, if you currently own something, you can make it contingent in your closing. So maybe the day of your closing on your new home, you're selling your current departure home to move into that home. We can definitely do that, but we have to make sure that you only have one house when you are using HomesFund's loan assistance. You have to be a resident for at least a year in one of these counties, and you have to, so you're either a resident for a year in one of these counties, or you're a full-time employee at a local employer. So those are our residency requirements. Like I mentioned, you can never rent your home while you have an outstanding loan with HomesFund. So if you are, let's say you get an opportunity to take a job in Fort Collins and you want to, keep your home and rent it out to someone here, you would have to pay HomesFund's down payment assistance loan off before you can do that. So once you pay HomesFund off, you can do whatever you want, but you can't have an outstanding loan with us and also be renting this property. And we require that a borrower puts in at least 1% of the purchase price into the transaction. We want to make sure that these funds are coming from the borrower's personal funds. They're not a gift, and they're not a loan. So that's where the budgeting piece of the counseling session comes in, where we help you with saving and getting to that 1%. We also want to make sure that after you close on your loan with HomesFund, you have at least 1 month's worth of the housing payment left in your account. That's so that we make sure that you are set up for success, right? You're not closing on this home with $60 in your bank account. We want to make sure you have at least next month's payment to make, and we're gonna work with you in the counseling and the budgeting section as well to make sure that you have that money in your account somewhere. So we have a maximum liquid asset amount of $25,000. So what that means is any money that is in your checking, savings, money market accounts, CDs, investment accounts, you cannot have more than $25,000 after you close on your loan with HomesFund. So anything above $25,000 either needs to go into the transaction as more down payment, or it needs to go into a retirement account. Retirement funds are not considered liquid assets because you're penalized when you try to take them out. So it's either, those are your two options. If you have done a great job saving, you either put into the transaction or you put into a retirement. We have a maximum of $250,000 into a transaction. So if you're, if you have investments and you're also getting gift funds and it's more than $250,000, we've decided that you're not really our clientele If you have $250,000 to put down on a house, you probably don't need HomesFund's additional down payment assistance. So if you have personal funds like investment money or checking account, those balances, if you have more than $250,000 to put into the transaction, you can't use HomesFund. You can't put $250,000 in and then also use HomesFund's down payment assistance. It's just not exactly the clientele that this program is for. $250,000 could buy you a house in some situations. So, HomesFund's down payment assistance cannot stand in for the borrower's 3.5% necessary contribution on an FHA loan. So FHA loans require a 3.5% down from the borrower. HomesFund's down payment assistance can't stand in for that because we're a nonprofit. They have rules. Has anyone heard of CHAFA, the Colorado Housing and Finance Authority? So CHAFA has a really great second mortgage program that we work with a lot, where they will cover 4% of whatever the first lender is whatever your first mortgage amount is. And that 4% can cover realtor fees, closing costs. It can cover the 3.5% requirement that FHA has. So that's a really nice, that program works really well with HomesFund, especially if you don't have money to cover those closing costs, because the closing costs can be, between $5,000 and $10,000 out of, that's just an additional cost that, apart from what the house itself costs that you have to pay at closing. Credit scores under 620 are not allowed. So if you have a credit score below 620, we encourage you to just stay in housing counseling, and we're gonna work with you to get that credit score back up, because the terms on the loan programs for individuals who have a 620 or lower credit score are just not as desirable. The interest rates are really high, and we want to make sure that we're putting you into a loan program that's going to be beneficial for you. So we'll just keep working with you until you can get your credit score up above 620, and then you can move forward with HomesFund's down payment assistance. If your credit score is under 680, we require that 2 months worth of the housing payment be left in your account after closing instead of the 1 month. So there's additional reserves required. Any questions on those guidelines? You don't have to memorize all this. We'll go over this again in counseling and in home buyer education class, but this is more just for you to see if this program fits for you. Fun fact, I don't know if you guys can see those numbers. Those are the average cost of homes in those counties. So, City of Durango, the average cost of a house is $851,000, the average. In La Plata County, $699,500, and then in Montezuma, $350,250 is the average. So I'd say we're pretty needed. This is a lot of money. Yeah. So when you come in to counsel with HomesFund and you're applying for our down payment assistance, we're going to calculate the household's income, so the entire household income. Even if you have a 18-year-old child living in the house that has a job, we're going to count that income as well. It's the entire household. So you have to pass a budget review. So that's that counseling piece that I was talking about, where you go over your entire budget, the household's budget, to make sure that you can afford and you're ready for an additional housing payment, a mortgage payment. We have a 43% debt to income ratio cap. If you, for example, contribute to your savings account, or you have not used a lot of credit, or you have really great credit scores, we can go up to 45% on the debt to income ratio. Certain loan funds require first-time home buyer status, so we already talked about this a little bit. If you qualify as a first-time home buyer, you get a boost on the down payment assistance, and we need to make sure that your front-end ratio is 35% or below. So your front-end ratio is just telling me that your housing expense is 35% or less than what your house makes, what your household makes for their gross monthly income. So 35% or less is what your housing expense could be. This will not finance closing costs. HomesFund's down payment assistance can only go towards the down payment. Your closing costs could be covered by CHAFA or gift funds or your own personal savings. We go behind first mortgage loan programs that are 30-year fixed rate or a 10-1 adjustable rate mortgage. So what that means is the mortgage interest rate stays set for 10 years, and then after that it adjusts every year. And what we hope is that you refinance out of that before it starts adjusting. So the interest rate changes after 10 years every year. We will accept any property underwritten and approved by a first mortgage lender pending a health quality standards inspection. So HomesFund is going to come to the property before we approve the loan and make sure that it's safe for you and your family to move into, make sure there's no, lead-based paint chips or exposed wires, things like that, health and safety related items before we'll approve the loan. We run background checks on everyone we lend money to, and there are closing costs associated with HomesFund's loan. It's normally 1.5% of whatever the down payment assistance amount is. So that's some savings goals you can start thinking about early on. Any questions on any of these guidelines? If anybody wants these slides after this, just take my card and email me, and I can send you the slides.
On the previous slide, you had mentioned the borrower can't rent their home. What if the primary residence has like a mother-in-law's quarters and you're living there, but that separate area you do plan to rent? Or
Yeah, as long as you're still living on that property, then yes, you could rent that. Any other questions on those guidelines? Okay, so now I'm going to talk about our other programs besides our down payment assistance. So we also have a program where HomesFund is the first mortgage lender, where we are not just doing the down payment, we are the primary lender lending you that larger mortgage amount. So this is for existing non-conforming mobile homes attached to real estate. And so what that means is there are all these mobile homes that are perfectly lovely and good to move into, but a mortgage lender, a primary mortgage lender, will not lend on them for some reason. Normally it's because they've been moved more than once, or the roof is rated for a different state than what the body of the mobile home is. Even though they're perfectly nice homes, a primary lender won't lend on them because it doesn't fit into conventional financing. HomesFund will lend on these. And it's an amazing program because these homes are often a little less expensive because they can't be lent on in the conventional market. So it's a 30-year term. It's a 3% fixed interest rate, which is really low compared to what we're seeing right now. It's like around 7% right now for interest rates, so they've really gone up recently. And HomesFund is coming in with 95% of the financing. So 95% of the purchase price HomesFund will finance, and then you, the borrower, will come in with 5%. It has a lot of the similar guidelines as to our other programs. There's a 15-year deed restriction for these homes, which means you can only sell them within the first 15 years of buying this house. You can only sell it to someone that is within the same income limit, and it has to be someone that's going to occupy it as their primary residence as well, just for the first 15 years, and then that deed restriction is released, and you can sell it to anyone. Homes older than 40 years are considered on a case-by-case basis. The mobile home title must be purged or purged through closing, which means the title is no longer held with the Department of Motor Vehicles. It's held as real property. The title is now real estate. And it's the same guidelines as our other programs. It has to pass the health quality safety inspection, and it's available to households at 100% of the area median income or lower. And this was just recently increased. The income limits were much lower before, so we're trying to open it up to more folks because it's a great program. Any questions on this? A lot of people wonder, how do I know if a home is non-conforming? Normally, the realtor will know. And if not, you can ask a lender and say, hey, does this home qualify for conventional financing? And if the lender says no, then HomesFund can lend on it. So HomesFund also, our newest program is a construction loan program. This is in partnership with TBK Bank. TBK is offering 75% of the financing for the total project cost. HomesFund is offering the 20%, and then the borrower is coming in with 5% of the project cost plus closing costs. So the cool thing about this program is that 5% can come from the value of land that if you already own it. So if you have a piece of land that you want to build on, we'll consider the value of that land as part of this 5% personal contribution. So it's for new mobile or modular homes. It can only be up to a 12-month term, depending on the project. So we're trying to still keep these project terms nice and short because we are, this is a newer program that we're working with. It's a 3% interest rate. Credit score has to be 680 or higher. Homebuyer education is required, and that same 15-year deed restriction is on these properties as well. You'll see that the income limits for this program are much higher than our other ones. So if you're looking at this chart and thinking, oh, I don't qualify for any of the programs, the construction loan program might be a really good option for you because we'll do for a much higher income limit for a household. Any questions on this one? We're just about to finish our first one, and it's looking really good. The house is beautiful.
What is your homebuyer education requirement?
Yeah, so HomesFund offers homebuyer education classes, and they're on Saturdays, and it's a full-day course going through the entire home buying process. So we talk about budgeting, budgeting, credit, inspections, the whole thing. There's 2 coming up in Cortez, and they're really, really great if you want to just learn more about what to expect. But we do require that everyone takes those before they can use our loan funds. It just really helps people prepare. And we always have professionals from the industry come and talk. During the mortgage lending section, the real estate, we'll have actual real estate agents and brokers come in and talk to the class, which is really helpful. Any other questions? And if you are interested in taking the class, there are flyers on the table over there, or you can go to our website and sign up. And I teach the class. So if you want to hear me talk for an entire day, I always lose my voice by the end. But yeah, it's a fun day, and you learn so much. So I kept mentioning the CHAFA program. I just like to put these up here because CHAFA has mortgage programs where the income limits are higher. So if you are seeing that you're not going to fit into HomesFund's programs, CHAFA is another option for you. And they have a great website. You just type in chfa.com and everything will come up. They'll have all their different loan programs. They also have amazing resources. They offer their own homebuyer education. So they're a great resource as well. So how to get started? I think a great next step if you're wanting to learn more and move forward with HomesFund or just learn more about home buying, come to Homebuyer Education. We have one coming up on April 25th at the Cortez Chamber of Commerce. If you feel like taking a drive to Durango, we have one coming up at Fort Lewis on May 16th. And then we have another one on May 30th back in Cortez. 8:30 to, I like to say like 3:30. The schedule says 4:30, but sometimes I can talk fast and get us out early. Yeah. And then once you come to Homebuyer Education, you can submit your application for one-on-one counseling. It doesn't have to be in this order. If you want to submit an application for counseling tonight after this class, you're absolutely welcome to do that, and then take Homebuyer Education after. And yeah, if you have questions about a specific scenario that we don't answer tonight, feel free to call us. We love talking through whatever situation you're in, and offering support or resources or what we could do to help you. But yeah, we're here for you guys, and it's really possible to buy a home in Southwest Colorado. It doesn't feel like it, but it is. And yeah, we're here to help. Does anyone have any questions? That's the end of my presentation, but I was thinking, if you guys want to chit chat about any situations that you're in or ask any questions about what HomesFund offers, I'd be happy to answer anything you have. Well, I'll hang around for a while too if you guys want to come and just ask individual questions, and my cards are on the table. So are some paper applications and other resources, and there's still lots of snacks left, so get in there while you can. Thank you guys so much for coming. Really appreciate it. Yeah.